The broadcast is now starting. All attendees are in listen-only mode.
Good day, everyone. Well, we've got a schizo market that is trying to break out, but every time it looks like it's going to, it backs and fills. Nevertheless, you can see on the NASDAQ chart and also on the S&P, the amplitudes of the oscillations here are tightening up. And yesterday we had a whole slew of names come through that were actionable. And as we pointed out, the market is not out of the woods yet, but nevertheless, it's good to see that a number of leading stocks are behaving appropriately. Now, Yellen and the other Fed chief, they were talking about how they are still quite concerned about the global economy, and therefore the move to hike rates is going to be on the slow side. Obviously, that's good for the markets because they like to hear that QE is going to continue and that a taper tantrum is perhaps further off than people are expecting. But you can see on this chart of USO right here that the oils indeed are seeming to roll over again. Same with the general commodities, basket of commodities. You can see that kind of pattern. And it's very possible that these commodities will retest their lows, especially if the global situation in China, India, and so forth can't get back on its feet, since simply China exerts a huge demand on the world's commodities, and they've been having a tough time of things, as has everyone else. So at any rate, we see a market that wants to go higher, and whether it's sloppy or not, the next move the market makes over the ensuing week is probably going to be to the upside. That's just based on everything we know today. Of course, everything can change tomorrow, but right now it looks like, given the internals of the market, things are looking better than worse. I'd like to go through a few of the stocks that have become actionable in the last couple weeks to see what they've been up to. We've got the first one, which is, let's see, double click here. I'm going to put up QRVO. I'm trying to get the window to come up so I can change the name. Yeah, usually the window comes up. Gil, do you know, I seem to have control of the cursor, but
what are you trying to put up there?
Window to put in.
What do you want to put up?
Put up QRVO. QRVO. Oh, there we go.
Whoops.
All right, it's got it.
Yeah, you're getting a delayed reaction.
Like
okay.
So QRVO, that was, we put that on the list on the 7th of May when it had the viable gap up. And then on the 18th here, it had a pocket pivot. And since then, it's been moving higher. In context with the overall chart, it's certainly doing the right thing. It has had these two pullback days here. So, you know, we say keep your stops tight and take your profits when you have them. But in this case, it's had a chance to relax a bit in its price move. So if the market goes higher from here, it's probably going to go higher with it. So in other words, now might be a bit premature to take your profits. It's looking okay. Then we've got another stock, GTN. There we go. Okay. Seems like the delay is gone. GTN, that's a stock we put on the list on the 21st. So that would be right on this day here as it just started to move higher. In context with the chart, yesterday would have been the day that you would have started taking some profits because it just goes straight up 5 days in a row. And in context with the overall chart, it's made a pretty substantial move. If you didn't sell it yesterday and you're hanging on your position, it's doing the right thing today. It's pulling back on very light volume, so you could probably sit with this trade without too much trouble. Another stock we've talked about before, we put on the list on the 8th of May. So that was back in here on the pocket pivot. And it's made a nice move since then. In context with the chart, it has had a chance to take a break, take a breather here the last 3 days. So if you're holding on to your position, it looks like it's doing the right thing. Got another one, AMBA. That was on the 14th that we put it on our list. It had a pocket pivot. It was on that day there. And it's had a really good move in a short time. Basically 2 weeks, it shot straight up. Now, in context with the chart, it looks like it's a bit ahead of itself. So if any of you started taking profits on this one, there's nothing wrong with that. And again, you can trade around a core position on some of these names where you might keep a certain fraction of your percentage and trade around that. So in other words, if this thing just keeps going higher, or if it backs and fills back to the 10-day or even the 50-day, you might still have a core position in the stock. That's for the longer-term traders out there. In this kind of market environment, it hasn't worked very well. I mean, clearly you maximize your profits by taking your profits when you have them and baby stepping your account. So when you have a nice gain like this, there's nothing wrong with taking your profits. If it does go higher, that's fine. It probably will issue another pocket pivot. A lot of the best stocks do on the way up. So you don't have to have that anxiety of watching a stock you sold at 50 go all the way up to 100 without issuing some other kind of buy point along the way. MOH, that is one we put on the 8th that had a viable gap up, as you can see here, and it's sailed higher since then. Again, in context with the chart, it looks like it's due for some sort of pullback. And again, you could trade around a core position, or you could just, you keep your stops tight. There's nothing wrong with selling on minor weakness. So in other words, if maybe breaks below that day, then you sell your position without really giving back much of anything, I guess 1% or something. AYI, that's a stock we mentioned a couple times because we put that one on the list on the 29th of April. So that was back in here. And actually, that was back in here on that day. And you can see it sailed higher in context with its chart. It was ahead of itself. So there's nothing wrong with having taken some profits as it started to roll over here. Now it's sitting on its 10-day, and if you still have a core position, might as well hang on to it because it looks like it's doing the right things. And finally, we have SKX, which had a viable gap up way back in April here. And this thing has sailed higher as well. Nothing wrong with taking profits along the way. But now it's getting tight. It's backed, retraced a constructive way in a tight fashion. And if you have a position remaining in this one, it looks like it too is doing the right thing. And with that, I will turn it over to Gil.
Okay, we were a little late getting on this morning because GoToWebinar was doing strange things and telling me I didn't have a webinar scheduled, so I couldn't log on through the main menu. I had to kind of take a circuitous route to get in. In any case, we got things started, what, about 4 minutes late, Dr. K, I think? So
that's right.
Anyways, so today you have a nice pullback on the Chinese news. I'm actually thinking that the fact that we didn't blow to the downside on what was a pretty big drop in the Chinese markets. I think the Shanghai was down 6.5%. What's the other one? The Shenzhen or something is down 5.5%. Pardon me?
The second largest drop they've had since the bank since the government started to tighten, and it was great to see that the U.S. market futures were so resilient, and they were only a fraction of a percent.
Yeah, so my reaction this morning is like, okay, I'm thinking buy. I started nibbling on some stocks yesterday on the voodoo type pullbacks. And Monday is also possible to nibble on some things. And I wouldn't say I'm in real heavy, but I've been scooping stocks all morning and on things that are down. And then, of course, there are things that are just jacking higher that we've been talking about for a while. So I think the best thing to do is go through some of these. GoPro is a viable gap up today. But again, you get this viable gap up here. This doesn't work. So it comes in. Starts to look like an ugly duckling, but what does it really do? I mean, the irony here is you can get fancy and say that, okay, it failed on the Bible gap up, so it's lagging. But all it does here, this is technical analysis 101, which seems to work okay these days on pullbacks, because you fill the gap and you run into the 20-day moving average on light volume, and you test it once on light volume, and each time it closes at the top. Someone asked me if this is still a voodoo day. I would call it a voodoo day, but because it's light volume and it was down earlier in the day, so what it tells you is that sellers didn't really materialize, and stock was able to lift higher on that basis from a lack of selling, which is constructive, I think, on a pullback. That's really what you're looking for selling to dry up. And so that gives you the same message. The other thing is, probably in the middle of the day or early in the day, it was trading light volume as it was testing the moving average on an intraday basis. So you have to think about that. You see the market's trying to turn here. We're down 45 on the Dow. I think, is that the best all day so far? But in any case, that's a Bible gap up. But when was your chance to buy it? Yesterday at the 10-day line on a lighter volume pullback or below average volume pullback. But the thing here is, if you were watching it early in the day, which I was, you'll notice that as it was coming down to the 10-day, the volume was light, and then it picked up so that you're almost at the moving average. So you're almost average here. You can see that maybe. What if I blow it up for you? You can see that it did pick up yesterday, but if that happens later in the day and in the morning as it's coming down to the 10-day and the volumes are running, minus 30, minus 40% below average, then you can look at it there and maybe nibble on some and see if it works. But as you get more volume, a lot of times that's coming in the second half of the day as it lifts off the moving average. So in this case, I would look at this as supporting action off the 10-day moving average. And of course, that leads to what you might call a nice little Bible gap up cup with handle, mini cup with handle breakout. But it's extended now, and the place to buy it was obviously at the 10-day. Same thing goes for these names. They look great, but the bottom line is you could have bought the voodoo pullbacks right into the confluence of moving average. You just settle in there, hang out, and then boom, there it goes. So it's a little more difficult to try and chase the breakout or even especially chase this. But as it gets close to the 10-day moving average, like it does here, you might be getting into a buyable spot on some of these that have already broken out. So another one like this is NXPI. Again, we talked about this one as it was having volume dry ups along the confluence of moving averages. In this case, mostly the 10-day, and you've gone higher. I think a lot of this was Umbrella going higher. But again, a little bit of an ugly duckling look. But look at how you get a volume dry up right at the 50-day moving average just before it heads higher, and you were seeing a pattern of that. And then it turns higher. I think earnings come out, what, next week? In any case, but you can see how this basic theme works. So you have to hang out with a lot of things. Maybe you take a position. For those of you who are slower traders, you take a position and then hang out and see what happens. You can see that may be the case with Fortinet, which really is just slowly trying to move higher, but it's been pretty tight. You got a pocket pivot yesterday, pocket pivot here, and it's just starting to come out. So I mean, right now, with some things already working and some of the moves I sell into, I turn around and I start looking for things that might be setting up. So I'm looking at what's moving next rather than what's already moved. FireEye, that was tied along in here. You always got to watch, buyout rumors. If buyout rumors are the only thing driving the stock, then once it sort of dissipates, when there are no real buyouts occurring, as was the case with FireEye and the rumors that Cisco was going to buy them, you get to see what the stock looks like trading naked, so to speak, without the news over its head. So it comes in and volume dries up, and you get a voodoo pullback right here. And that's close enough. This is a volatile stock. That's close enough for me, and it goes higher. I bought some shares in here. It runs up. Comes back into the 10-day. They announced a $600 million convertible offering here, and it shrugs it off, sells off in the morning, shrugs it off. Volume is above average, so that's supporting action off the lows, and now we turn and go higher. Thanks to Palo Alto Networks, which came out with a strong earnings report, but had already been moving higher. And again, you get the turn here, bounces off the 50-day, so there's your ugly duckling bounce on the top of this breakout. Volume is drying up. Then you get one pullback into the 10-day line where it tightens up. So you can see here you're actually wedging for 3 days as you move above the 10-day line, and then you pull back for 2. the volume's light, and I'd say it's voodoo volume levels, volume dry up, extreme volume dry up. That's what a voodoo is for any newbies out there, and you could buy it there, and it just comes trucking out. And notice how a lot of these stocks have been moving without really paying any regard to what the general market's doing. And that's really the key, I think, is just watching your stocks and not getting bogged down with what the indexes are or aren't doing. So you see pretty much the whole cybersecurity area is on fire today, except for CyberArk. Let's see. I actually bought some of that on the pullback this morning. Give me 1 second here. And it's trying to come off the 10-day, 20-day confluence. But you can see here the volume's drying up. And I think that right now we are running, let me get that out of here. Yeah, about 5% below average, so it's just hanging out, but it may need a little more time. But I think if FireEye, Fortinet, and Palo Alto Networks are going higher, this one's coming out too. Tesla turning back through the 50-day moving average again, pulls into the 10-day line. This thing's had a more than 20% run since I first started talking about it as a buy right here on this gap up move. It is an ugly duckling type setup, and it works pretty well. But the other aspect to ugly ducklings are that they're generally in bigger stock names that will move with the market. So Tesla is a good candidate, and of course BABA is a good candidate. And so far that's been working. You had this gap up move here, and it's settled in. Volume dried up. It wasn't looking so hot right here on this day, but then it turned on the news of the IRS reconsidering the tax status of the Yahoo's spinoff of their BABA stake. But you can see it just pulls into the 10-day moving average, and that's where I'll scoop it right there. And the volume is running kind of light right now. We can actually check some of this. Got it my buy list. And let's see. You can see what's hopping, that's for sure. But we want to look at what's drying up on volume here. So you got GoDaddy, which is pulled back into this area here in the top of this base, and now it's turning out, and that's kind of where you had to buy it. But I want to look at BABA here. Volume, you might notice on this chart I got these red and green bars. These are actually showing me visually what volume is doing. In terms of the zero line would be even volume for this time of the day, and anything above is telling me on an intraday basis. Also, if you can see this, it's projecting the end of the day volume. So you can, it is a projection, and it'll change during the day, but it does give you some idea right away where you're trading at in terms of the volume. And so it looks like it's going to trade higher volume so far today, even though right now you're running, let's see.
BABA's at
11.9.
plus 2%.
So yeah. So it looks okay, I think. And of course it's going to pull back on news like China, but China's gone up. So Shanghai's gone up 50% this year, but the whole time this year BABA's been going lower. So I don't understand necessarily why, if the China market corrects, BABA has to go. BABA can't go higher. So I think this just sets up the pullback. The news sets up the pullback into the 10-day, and I'm not really seeing anything all that abnormal here. I mean, if you bought it at the 10-day here, it's up, and the pullback to the 10-day looks normal. And the other thing you got to remember is it's still working its way around. But I think the next stop is probably the top of this gap, and maybe 99, maybe 100. I don't know. Market's trying to rally back, but kind of sputtering a little bit, but the Nasdaq's pretty well off of its lows for the day, is it not?
Yeah.
Anyway,
very much so.
CRM, this is another one. Buyout rumors. It actually gapped up on earnings, and then you had buyout rumors jacked it up here. I actually bought some on this day and sold into that move because it was on a CNBC report that they were going to be bought out, or that they had talks with Microsoft. And I noticed, stock starts jacking, and I'm long it. I'm long the thing at the same time, and yet I'm listening to this report, and they're basically saying, Microsoft blew it off. It was too rich for them. And the stock ran up, so I sell into that. But it's pulling back here on light volume. It looks like light volume. Let's take a look here. Where did that go? In any case, I'm not sure about that one. JD has come back, so with Baba coming in, to me it looks like, to watch the two of them, I think the two of them will probably move together. In fact, that JD wasn't blown apart this morning either. Seemed like a good reason to buy Baba as it was dropping below 90 and more or less tapping into the 10-day moving average. Let's look at Retrofin. Here you had the Bible gap up yesterday. It pulls right into 29.08, just above this low at 28.67, and then trying to turn higher. So if you're into highly speculative little biotechs, there's your ticket right there. I don't know. They make some interesting drugs, and they're supposed to actually make money next year. 56 cents a share, I think, which is a big jump from 9 cents they're supposed to make this year. But for one of these highly speculative biotechs, I would say the one thing it has going for it are earnings, which always makes me a little more comfortable. But like I like to say with biotechs, they look great in hindsight mostly. Biotechs and medicals, drugs, all that, because this sort of stuff can happen very easily and ruin your day. So they are speculative names. Keep that in mind. Here's an interesting one. Abengoa Yield. It's a solar, I guess the equivalent of sort of a solar REIT. It's an income generating instrument pulling in the revenues from power generation in the solar industry, solar power generation revenue streams. And they've been doing pretty well. If you look at this, let me see. On a weekly, you can see it's on this big, ugly cup with handle. It's trying to break out. So this is actually a cup with handle breakout, and it's trying to come out. Don't really see anywhere to buy it, but this could be another. It's acting well. It's in the group. Sedge is going higher today. It looks like it's going to have a pocket pivot. Is that right? Well, close enough. It's had a cluster of 5-day pocket pivots, so that's probably going higher. SunPower, I don't know about these. It's trying to find support at the 200-day, but First Solar blew up the other day, so that's not looking very good. On the other hand, VSLR is holding at the 10-day line on light volume today so far, and that looks reasonably constructive on the pullback. So you're seeing this bifurcation in the solar industry. What's hot, what's not? And of course, what tells you the story is the volume, price volume action of the stocks themselves. Not that hard to figure out. A Solar City, another one in the residential solar, and it's hanging in there. It's interesting. The Wall Street Journal wrote an article last Monday about how utility scale solar is really the profitable place to be, blah, 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 and residential solar is just a big fraud. But it's been the utility scale stocks that have been breaking down, while the residential installers have been holding up. Go figure. Maybe it's all about the new fad with the Tesla battery, the home battery, and that's moving today on some news, positive news on the battery. Let's see. What else? NXP, we looked at that. Splunk, it's hanging in there. I mean, this thing is pretty volatile. Another cup with handle within a cup with handle within another cup with handle. So that's about as fractal as you can get on the weekly chart. And it's trying to go higher, so maybe it goes higher. Volume running 115% above average for this time of the day. So it's trying to push higher, and somebody's interested in it. Facebook. Facebook had this pocket pivot. I see it as off the 10-day, and so the pullback here on light volume, this would probably be a spot where one might buy it. But the other thing to think about is the whole social networking space is weak, and so there's no real group strength here, and so the underside of this base presents short-term resistance. If you saw it get up through that on a nice pocket pivot through the 50-day, that might be confirmation that it has more upside. But with Twitter, which I'm watching these, it's basically just in a bear flag. Yeah, it's up with the market, but I would watch these because if we get some sort of market correction that lasts more than just a day, I think these would trigger on the downside and you get breakouts. So LinkedIn is the other one. And then Save has been a great short on this bear flag breakout. So, but that's all related to the airlines, which is a group breakdown. And you're just seeing that across the board, all of the airlines, Delta, United. So anyways. Netflix is just hanging up along its 10-day. Had a Bible gap up here, tracks sideways, bounces off the 10-day on a voodoo drive. But actually, you see here, it's pulled under the 10-day. When it pulls under the 10-day, a lot of times what I'll watch for is another area of support in a flag. So in this flag, it does dip below the 10-day, but it holds this low. So that's okay. I don't think the 10-day is necessarily... To me, like as I've said many times, moving averages are kind of fuzzy zones. I view them in sort of a quantum way. It's not a specific line, but a little fuzzy zone. And some stocks being more volatile will move around those. Dr. K has talked about that kind of stuff, so-called porosity. And so you'll get, you get a little bit of that. And but the bottom line is it holds this low here. Maybe even have undercut it just by a hair. Yeah, just barely, by about 40 cents it looks like, and then it just goes higher. Netflix going higher, even though everybody wants to short it, but they're not taking a forward-looking view because their earnings I think are $27 in 2019, kind of like Amazon. It's got $18 by 2019, and so that's coming into the 10-day on light volume today. Maybe that makes it viable. Let's see, GoGo. Pulling into the 10-day on light volume. So, it tried to come out. It was viable along here, I thought. You get some voodoo action here, holds, and then it comes off. This was a 5-day pocket pivot. This is another 5-day pocket pivot. So you got a cluster of two of them. Sometimes when I see clusters of 5-day pocket pivots, that's often a positive sign, and that's something I look for. That's one of the reasons why on HGSI, the indicator for pocket pivots will pick up a 10-day or a 5-day, and that allows me to easily see clusters of pocket pivots, and it's one of the reasons I wanted that on there. But I think those guys have done a great job, even with the new volume indicator. But I'm not sure what happened to my chart view here. Suddenly disappeared. Well, you can see the projected volume here. Got me stumped. Anyways, let's see if we have any brilliant questions today. No questions. You guys are all just starstruck and dumbfounded by our brilliant analysis this morning, apparently. ASHR, good ETF for Chinese index. Yeah, that gives you an idea of what this thing's been doing. Here we go. Look at that move. That's on a weekly chart. And then today you're getting smacked off the peak. Maybe it's just a viable pullback. The ugly duckling has taken a Chinese vacation and he's there now. So, although Dr. K, the ugly duckling was seen stumbling out of Moe's Tavern this morning at 2 a.m. So he could be out there.
Peking duck, no doubt.
Yes. When Dr. K's in town, the Moe's Tavern is our favorite watering hole. So usually after the closed martinis are in order most of the time. Anyways, let's see. Vasco is this is a slow stock. I don't think it's one of the leaders in the group. I think Cyber, Palo Alto, FireEye, and Fortinet are. So those are the 4 stocks I want to focus on in the group. Vasco, they do credit card encryption security, I don't know, something like that. But it's a little different market than dealing with the big hack attack on the IRS type of stuff that occurred the other day. But it's pulling into the 20-day on light volume. So, if you like it and you just have to buy it, then I think you could buy it here. But I don't know if it's the juiciest one. But I'll go and say that, and then over the next 2 days, this thing will launch out of here. So if you like it and think it's in a viable spot, make your own decision. Don't listen to me. I make a lot of mistakes. Remember, I keep a sign by my trading desk here. It says I must lose to win. And so, as a trader, I would say my identifying traits are that, number one, I'm not afraid to take any shots. And number two, I'm not afraid to take small losses if I don't think something's working, and I'll bail out. Number three, I may come right back into it later on if it does start to work out. So I can start out being wrong and end up being right on a stock. So I've done that many times. And sometimes when I made my biggest money, that has been the case. I would say like even 2004 when I had Apple, way back when Apple was trading at $37 a share, I kept buying and selling it and buying and selling it and not making any money on it. So I was wrong and wrong and wrong and wrong on it. And then when that thing gapped out of there and I bought it at 42, 43 bucks, ultimately ending up with 1 million shares of it near the peak in 2005, I think it was, early 2005 in January is when it peaked out on a short-term basis. I had to be wrong several times before I was right in a big way. So all that's to say, unless you're of that mentality and you're somebody who marries your stocks and can't move quickly and is afraid of being wrong, then, don't listen to me. Anyways. Beginner question, could you explain pocket pivot? Yeah, okay. It's on the website. If you look in the what do you have to look at, Dr. K?
Well, you can go to the FAQs that talk about all the different sorts of
FAQ.
pocket pivots. There's many different contexts also, but I would go to FAQs, and there's a whole pocket pivot section on this.
Yeah.
You can just read your way through.
So you can read it and maybe even read our books too. That might be helpful. But a lot of stuff is in the facts, FAQs, on the website. So you could look at that. Don't have time really to do it right now. At least not even to give it justice. All right, Gilead. Gilead's going higher. This pocket pivot worked after an ugly duckling pullback, but notice how it held the 50-day and then it turns and goes. Almost too typical of this market, I have to say. Neil Young, take my advice, don't listen to me. Yes, I agree, 100%, Scotty. Sheer brilliance and genius as usual. On a macro view, do you have any concern about IYT? I don't even know what IYT is, much less have concern for it. But, my concern is that it means that the transports are sucking. And it has nothing to do with this stock, or 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 this stock. So, that's the extent of my concern about that. Who cares? This to me, this is just modern portfolio theory or modern portfolio stupidity that is taught to the masses. The divergence between the transports and the rest of the market isn't, transportation has been mainstay of the U.S. economy, but maybe it's just not where the growth is. And a lot of that's due to the airlines getting tagged. And they've just been correcting. For all you know, the airlines are going to get to a low here, looking like crap here. But they've had a big run, so they're entitled to a correction. But that doesn't make me concerned in the near term. Dr. K, do you get concerned about the transportation averages in the near, medium, or long term?
Well, in current market environment, it really doesn't have much bearing. Even in prior market environments, yes, it might have some predictive value in calling short-term or longer-term tops, but nevertheless, I always stick with what the stocks are telling me to do, even then. So it's not an average that I really acknowledge.
Yeah, and it's probably an outmoded way of looking at things. The transportation is a big part of the economy. Is it a leading indicator? Maybe. So maybe it's telling you we're going to have a market top in 2 or 3 months. So I remember housing stocks topped well before the market did in 2007, and that didn't tell you that the end of the market was in. A lot of people would ask about that because, well, housing's led this rally and it's starting to top. Are you concerned about that? It might be a clue for the future, so file it back there, but it's not something I pay attention to because I'm watching the stocks, and so is Dr. K. So anyways, Celgene. Celgene is a stock that I consider a market short. But with these other names, you know, this looks like a head and shoulders, but with and it's had a big move. But with these other biotech names hanging in there, such as Gilead, such as Biogen, which don't be surprised if this thing pulls an ugly duckling boomerang and heads higher. I think you had a pocket pivot somewhere here. Let's see here. Try to figure maybe here. I can't figure this out. In any case, you know, it's drying up along the 10-day. Is it a bear flag? Is it going to turn and go higher? I don't know. But I just keep it on my short watch list with the market.
There's no pocket pivot pattern, but
go ahead.
There's no pocket pivot pattern, but even if there were, you know, it's had a gap down just recently, not looking good on the price volume basis. So
no, not really.
It really wouldn't matter.
So to me, it's a market short. And if the market starts to get in trouble, that would be one of the names I would go to. The other ones I would be watching also for a trigger on a bear flag breakout to the downside on Twitter or LinkedIn. You know, maybe even Facebook, since that is a weakening leadership group. So remember what I was just talking about before the 2007 top, we saw housing stocks top. We actually saw financials top too well before, didn't we, Dr. K? As I recall.
We did.
Yeah, and so you had some clues.
That's right.
It didn't mean the market was topping overall, or that there weren't some areas of the market that were going to continue higher, such as we're seeing now in the face of the transports tanking. But it might tell you something coming down the line, or maybe the first wave of things at top. So maybe social networking, which has been a hot group for a couple of years at least, 2 or 3, maybe 4, I don't know. Maybe that tops here, and that's one of the first, you know, big groups to top, and we have some other groups top later on, and then the market tops as a whole. So I don't think it's a reason to run away from leading stocks, but in this case, it may be a reason to run away from former leaders that are breaking down, and this may turn into a short. So it's had a long run. It's a late stage failed base here, breakout. It has failed, and it's nudging up against the 50-day, 10-week line, which is not unusual for a late-stage failed base. It'll break down, bounce off the 200-day. This is almost textbook. And then up to the 50-day where it becomes shortable. So it's possible, and you can see that so far, at least on a short-term basis, Facebook has been shortable on the rallies into the 50-day. On a short-term basis, you get it, you know, pull a couple of bucks out of it if you're quick on the draw there. But not necessarily something that's going to come out of here. And my hunch is that with Twitter and LinkedIn looking like bear flags, that you may see the whole group go together if we get a market correction. So that's something I'm keeping an eye on with respect to the short side. Have the two of you written about how you look at position sizing? I personally don't take a mechanical view, and I think the IBD method of you know, buy half your position and then add 2% when it goes up, and 2% more when it goes up, and 2% more when it goes up. And I would finish that off by saying so that you can get your head handed to you when it corrects off the peak and have a full position at that time. My take is to try to get as big as possible at the lowest risk entry points. So, example, I'm not going to buy this breakout and then add here and then add here and then add here, so that I can be filled up with stock to my, you know, forehead when it breaks down and slams into the 10-day. What I want to do is I want to buy it on the voodoo pullback here and take a bigger position. So I'll take huge positions. You know, I will say that a 20% position for me is small. Okay, so that's me. And the way I trade and the way I handle positions, because I'm also quick to unload things that don't work or aren't doing what I think they should. So I develop a thesis about a stock, sometimes on a daily basis if I'm working a big position with respect to how I think it should act. And if it doesn't act the way I think it should, I'll blow it out. But if it sets up again and goes, I'll buy it back. So I use big positions that way, and I move quickly. if you wanted to
Yeah,
use.
I think in this kind of market environment that we've seen, this QE motivated environment, that's the best type of position sizing technique to use because as we've seen, when a stock it takes the stairs up. It takes a while for the stock to get some gains in many cases, and then it takes the elevator down. So in 1 or 2 days, your profits could be wiped out.
Yeah.
And so it really in prior markets, that the slower technique worked because stocks tended to trend for longer periods. So you could add to your position on the way up, provided you were really sitting in a leading stock. But really, especially the last couple of years, there's been very few stocks that behave normally, and so you really got to get your profits in quick, and then be quick to, you got to be quick to get your profits and quick to take them in this kind of environment. So it's a different style altogether. I would say that some people are not going to be comfortable with getting big early on, and don't force it. Either train yourself to become comfortable with that, or if you're trying to force a trading style that you're not comfortable with, you will then lose money because fear will get the best of you. So you always have to keep maybe trade with small money and then get used to trading in a different way until it becomes habitual. So you can develop other types of position sizing techniques because not one size fits all, and you really got to position size ideally in context with the market environment. And this is the kind of micro environment where position sizing the way Gil has been position sizing is proven out. I mean, the guy's got triple-digit returns under his belt in one of the toughest market environments that we've seen.
Well, that was last year. Keep that in mind.
What's that?
That was last year. And as far as I'm concerned, that's history now, but we'll see how this year goes when we're all said and done. But this is a much tougher year than it was last year. So, but in any case.
Yeah, it just keeps getting harder and harder, and at some point there's got to be some sort of implosion, I think, because the markets cannot get they've really come to the point where they can't get any more challenging than they've been. You can't really trace out a pattern that's any worse than what we've seen. I suppose that barring some unknown out of left field market crash that has never happened. I've gone through you can go through 100 years of market history, and when you have a major market crash, there's always a warning prior to that crash, always. Mm-hmm. So again, I suppose that's the last thing the market could serve up if it really wants to serve everything tough as nails to investors.
On position sizing, here's I guess a follow-up question. Somebody must have just read a textbook on portfolio management theory. How does diversification play into the way you trade? Do you see it as a way of protecting yourself? Diversification is what did Bernard Bruce say? Is a hedge against ignorance. So if I think so the question is, for example, would you only have a position in one of the cyber stocks but not all three of them? If they're all three moving, or all four of them, I'd buy them all, and I'd load into them as big as I could without worrying about diversification. Or to me, that's all BS. I mean, that's all modern portfolio theory BS, and it doesn't pertain at all to the way I trade, and it's certainly not the way I've making over 1,000% of my personal account in 1999, which is a rip-roaring year, and making 115% last year, which was not such a rip-roaring year. Although I know people who bragged about making 120% in 1999. So to give you just a relative idea of what the average person will do versus a maniac like myself, it's just something that's so foreign that to even talk about it doesn't even make sense to me. I watch the stocks, I watch the trends. If it's moving in the right direction, you're fine. What are you diversifying against? Your own stupidity, your own ignorance, your own lack of skill? If that's the case, then you need to educate yourself and develop your skill levels and your judgment rather than relying on some nebulous concept about diversification. I mean, what the hell? Anyways, don't mean to be so caustic, but some of you I know have commented that you miss my caustic nature. So I don't know, am I mellowing out as I get older? Can that actually happen? Any case, let's see. Hold on a second. VIPS. Anyways, you don't have anything to add on diversification, do you, Dr. K?
No, I mean, you pretty much said it all. I mean, it's always been the same issue that, people want to use diversification as false comfort. And what it does is it costs you money in the. So, it's just don't develop that kind of crutch, because it will prevent you from maximizing your own personal potential as an investor.
Yeah, so.
And that said, I mean, obviously, don't put your entire account in a stock overnight where it could gap down on you. Obviously, don't do something foolish like that.
I do that
but I
all
always
the time.
understand, the down.
I do that
And
all
if you
the
do
time.
it, know what you're doing. Know what you're doing. If
Are
you're
you
holding
calling me a
stock
fool?
overnight. Oh, if you got 200% of your account in one stock overnight, yeah,
I've never
I think
done that. I don't. Maybe like 100.
that would not be good.
I remember one time in 2004, I was 100% long Google and 100% long Apple, and that's it. And I didn't do anything. I just sat there with it, paid some margin interest, and made a bunch of money on that year.
Right, but of course, what if, there's always the what if scenario. What if the next day, there was a nuclear attack or something and the market gaps down, 8%?
You mean like the time I went short, like a 50% position in Lycos?
Remember Amazon? The Lycos, that's
You
right.
remember that?
Yeah, I remember. You looked freaked out. You came to my office and you looked freaked out.
Well, I saw
thinking,
that they, I don't know, I had something like 50,000.
They almost got bought out.
What's that?
Yeah, they got bought out, and if you had been sitting on that massive position on the short side,
Well, I was. They were buyout talks. The stock opened up like $3 or $4 the next morning, and I covered it immediately. And I had 50,000 shares short. Now that's the $200,000 loss. See, for a lot of you, that would be your life savings, and probably everyone else in your family's life savings. But for me, that was actually on the grand scale of things. I thought it was a nick, and I was so grateful to be out with just a 3-4 point loss on the position the next day when it gapped up, because it eventually, and I think I was shorting it around 53, 54. It eventually went to 96 on that buyout news or buyout rumor, and I think they did get bought out by Telefonica.
Right.
But that's.
But if they had been bought out that day, if they had opened up, say, 35 points higher, then that would have been a $2.5 million loss, and of course then it's some serious money relative to the account size at the time.
Yeah. VIPS. I think VIPS is a short, and I can't borrow it, so I haven't been playing with it, but it looks like a short. Hard to say. And with the Chinese markets getting worse, I don't know. I think BABA is probably an outlier, but VIPS maybe not. I don't know. I don't know that much about it. You know anything about this, Dr. K? You'd be out of it. You wouldn't be playing with this on the long side. Would you short it? I think it was shortable. It's obviously shortable as it rallies into the 20-day line.
Nice, it's a nice textbook, short as it's trying to rally on lower volume. So you have a couple of shorting opportunities in this one, but certainly not on the long side.
Oh, I love this comment from my friend Gar, a fellow former Merrill Lynch broker trainee at the same office in Beverly Hills. We could probably someday, maybe if we, Gar, if you ever come out to the HGS Investors Software Conference, we can go have some drinks and talk about the sales manager there. And don't forget Stan the man. Those guys were something else at Merrill Lynch in Beverly Hills back in 1991, I think it was, 1990, 91, sometime in there. But he says, since I joined in August of last year, I believe you've become more tolerant/mellow. Heck, you put up with me. Well, you're not that bad, Gar, to tell you the truth. So there is no shortage of morons out there, let me tell you. Somebody says, I shorted it at the high yesterday. I hope that's VIPS. That's brilliant. I love it. Right at the 20-day, you saw it. And you see how once it starts to break down, the 20-day line, the screen line here, becomes your reference point for most rallies. A lot of times, even when they go back above the 50, this is almost textbook. Because once it fails on this breakout attempt, it just bounces up into the 20-day line several times. That's beautiful. Well, I hope you make a lot of money on that. Make sure you tell us all about it when you do. Catalent, let's see, we're getting to 8:55. We got about 8 minutes, I'm going to say. Coming back, V-shaped move back to new highs on the weekly. And I guess you had to pull the ugly duckling here, Kind of like VSLR, it looks like, in the sense that when earnings came out, VSLR ran into the 50-day. I look at this as a pocket pivot off the 50-day, but you could look at it that way, or more simply, just as massive support at the 50-day line, which shows up as a supporting week, I think, on the weekly. And stock volume dried up as it tracked sideways and dipped in just along the 20-day. So there's the fuzzy zone of the 20-day kind of at work here, and then it goes higher. So somebody said, "Yep, your voice was guiding me on VIPs." That's good. Somebody asked if shortable gap downs or gap downs are shortable. Well, if they go lower, yes. In this case, you can see we have, here's a big, ugly sort of pod sort of move. This is a pod right here, and then you have this jagged handle, resistance at the highs, and fails on the breakout after earnings, and that's what you get. You get the gap down. Yeah, I was saying you could probably short this one yesterday around 84 when it opened up using the high at 85 as a stop, and it has headed lower. So that would have worked. There's other examples. I think Green Mountain was one a few years ago. That was a great shortable gap down. So was Netflix when it had one of its, I think, 2 massive breakdowns over the last few years. If you look at Netflix, this stock, this is a pretty good breakdown here. This is a pretty good breakdown here. This is a pretty good breakdown here. So it's had, you know, these very shortable breakdowns, and I'm trying to remember which one it was. It could have been this one here. This, yeah, this occurred on a gap down here. So yeah, that works. If you read the new book, you can hear all about it. So I would suggest you run out and buy it now, or actually go to Amazon.com and you can download the ebook version of Short Selling with the O'Neill Disciples. And you can have it within minutes or seconds, depending on how fast your download speeds are on your home internet or office internet or wherever you might be. Let's see. Any other brilliant questions? Data. Data is a buy at the 10-day, I guess, on the voodoo pullbacks. It was buyable here. You had the buyable gap up. You had a test. You know, a lot of times when you see that and it's getting close, you decide whether you're going to step up and take a shot. And in my view, when you have a situation like that, and you can define a very close buy guide for a stop, you know, such as if you go with Skyworks and you're using the 50-day or the 20-day in here as a guide for a stop, you could give it a little more room, or you could say this thing tends to hold the 65-day exponential, so maybe I'll use that instead. But at least if you have some idea of a reasonably close stop, and I would say, you know, less than 6, 7, 8%, 3, 4% maybe, to me is more optimal and more what I prefer. And if you can keep things tight like that, you can come in and start nibbling, and you don't have to take a huge position, but you start building your position. And I'll do that. I'll start taking little bits. So, you know, BABA today, started buying a little bit yesterday because it looked okay in here, coming down a little more. Hits the 10-day, I'll nibble a little more on that. If I start to see it round out and turn higher, then I may come in heavy. But again, don't be fooled by a big move here, because sometimes that's what it does for a period of time, and you got to go sideways. So, Go-Go Voodoo. Go-Go looks good here, I think. Real tight in here. The only issue I have, and I'm not sure if this is either just holding it back temporarily, and once we see a bounce in the airlines, maybe it'll turn, but it is that weakness we're seeing in the airlines, as it is related to the airlines. But, you know, I don't know if you can see cyber starting to go now. Yes, I was buying a little bit of that around 64.20 just a little while ago. Mobileye, I like Mobileye. Pullback right here on Voodoo volume, I believe. Minus 55% right now. No, yeah, you got to be all over that, I think. Any other questions? I don't know. I'm ready to wrap it up. Oh, here we go. My biotech sleeper. It's time for the eyes to have it. Second Sight Medical. Compelling theme. I guess it's had a couple of pocket pivots, and this one, there's a little bit different. You had a pocket pivot here off the 10-day. It's under the 50-day. There is no 200-day on this stock because it's a baby still, and it has a big, ugly cup with handle. But I can make it look less ugly if I do this. See how it seems to look a lot prettier. So you get nice on the weekly chart, volume dry up here, undercut this low, coming out, volume picking up. You got a pocket pivot. My thinking is with it spending all this time rounding out this funky cup with handle. It seems to me that this thing, it's at a do or die point. So it's got to get going. Okay. And so this is it. So I bought some yesterday, and today it came down a little bit along the 50-day. So you see with it, I'm hoping it goes to 100 soon, maybe in a couple days, right? That's what these biotechs all do, right? Once they get going, right? Somebody answer me. Let's see. Stoners Unite. We have Voodoo pullback along the 10-day. This thing is simply, you had a nice run up here, so you're consolidating this with the pullback. And it's a volatile, thinner stock, trades 472,000 shares a day. So it's a thinner stock, but it trades in the triple digits, which makes it a little bit thicker than it may seem. And what is that, Dr. K? At 114, what are we trading there? It's still not very big dollar volume, right?
Well, $500,000 is, let's see. No, it's all right because it's trading 500,000 shares a day and it's $100 stock. So it's 50 million
yeah, so that,
daily dollar volume.
That qualifies. So that's
good enough.
Blue. That was a pullback here, I think, or buy on the pullback here. It was a pullback and it was viable. So so you had to be opportunistic there. What else is looking exciting? Kathera. The fat chin stock or the chin fat stock. It's a little bit like ZLTQ, which is a belly fat stock, but it hasn't really worked out. So I guess it's not that exciting. And I can tell you that right about here, I was having dinner with a big hedge fund manager friend of mine who was talking about how great it was. And it sounded great. I mean, what they do sounds great, but the stock action has just not come through at all. But Kathera, maybe it has more of that speculative fervor to it, with this kind of a move higher already. So you had one big gap up, now it's consolidating. You get pocket pivot here, pocket pivot here, pocket pivot here. So maybe this thing coming into the 10-day, maybe it's viable here, it's ready to rock. And of course this should be at around 200 in a few days, if it trades like all the other biotech precedences that we have out there. I am joking. I hope you guys aren't. There'd be some idiots who put their whole account into it and get hammered on a news-related gap down. Girlfriend says Zeltic process is bogus. Okay, good. How about KYTH? Is there? I don't know. You could get in trouble with your girlfriend on that, Scotty. Got a fat chin and a fat belly. Is that what you're saying? And are you revealing that to the world? I'm going to think on you. But I don't know. I think this is easier. It's just a drug. They inject you with it and it makes your fat chin go away.
Yeah, it's completed phase 3 clinical development, so maybe it's nearing some profitability. I don't know, but the estimates don't look good. So it looks like it's still very speculative.
Right. So it's fairly speculative. Okay. Zyop is flopping out, but maybe it's rounding out the lows of a base. So that's a possibility. And maybe things dried up in here, starting to flatten out. Notice how it's getting kind of tight along here. Maybe it's getting ready for another move. Perhaps we should keep an eye on its brother, Intrexon, which is pulling into the 65-day exponential day on light volume. And on a weekly chart, this thing's had a pretty good move, so it's basically holding in a base. And you can see that it's tightening up a little bit in here, so maybe that has a shot. What about anybody have any favorite biotechs that are actually good? What about BioMarin? We looked at that, right? You looked at that earlier, didn't you? Yeah, probably was viable in here. There's another one. These guys are being bought out, aren't they? No, that one's stinking. Medivation, yeah, that's it. It looks sort of like BioMarin if you look at it, kind of. I mean, couple weeks ago. This one's gone higher, so maybe this one does something similar. Sort of a pocket pivot here at the 65-day exponential. I don't know. To me, the action itself looks constructive. So, I tend to like it. That sort of action. Not sure I'd necessarily buy any of these. Let's see. TTPH. Tetraphase. Yeah, that's another one. That's in a base. Maybe it's going to go higher. Low volume so far pulling into the 10-day line. ADPT. There you go. Another one. Yeah, some of these are moving higher, and then one day you're going to wake up and it's going to be gapping down 50 points in one day. These things make me nervous holding overnight, Dr. K. How about you?
Oh yeah, no doubt, because your risk of gap is much greater.
Anyway,
on
but
those types
if if you're properly allocated and diversified among all the speculative biotech names, you may perhaps have a chance. OPK, Opco Health. There we go. I like that. So I like Costco. It's Opco. Acting okay. Nice.
ERX has done very well since its pocket pivot that we announced on the 29th.
Yeah, so it's worked. I think that's pretty much all I have. And it is 9:07, so I think we're done for the day. Our work is done here, Dr. K. I think we can move along now. And whatever other cliches I can think of. We're going to wrap it up. Yeah, this one's going higher. Why don't you tell me about this one down here? Jeez. Anyways, you guys, Sedge 620, the Sedge. I love the Sedge. What a great stock. Kind of thin for me to play in any real size, but anybody who has, and we talked about it right here on one of these webinars right here on the ugly duckling setup where it looks like it's failing. You get a pocket pivot, but it fails, but not really. You see, if you could have extended the 20-day moving average into the past, it actually would have found support right at the 20-day moving average. So maybe I'll have to put that indicator on my IPO charts. Anyways, that's all we've got today, you guys. I think the word is try to use a weakness to buy into. Favored names on constructive weakness. I think I've covered a number of names today that qualify, and you can see how some names that are currently working very well were in exactly that state, in low volume pullbacks, or where you have these sort of voodoo consolidations where you hold tight along the moving average with the volume drawing up in the extreme, and those are the setups that you're looking for, I think, to buy into, or pullbacks on that basis now that the market's up and trying to get going. So we'll see how we close today. Anyways, that's all we got. We'll catch you guys next time. Have a good one. Take care.
So